And good evening, everyone. Thank you for being here with us tonight, this afternoon. We can see that people are gathering. Vlad, you wanted to say some organizational questions?
Now, while we're waiting for more people to join, I'll just be uploading some of the materials, handouts, the presentations for Harry and Marcel and yourself. So they will be available in the handout section.
Hi, Suresh.
Yes. So we can see, if you have any questions, you can always, send it to us, and hopefully in the end we'll have a little bit of time left to do the Q&A, but we'll come to this a bit later on. We still have a lot of people joining in, so just bear with us for a few minutes.
But in the meantime, while so many people are already here, let me just thank everyone, first of all, for joining us here in these turbulent and crazy times that we're living in. And so many people, eyes are glued on TV screens and the news. We thought to kind of dilute the mood a little bit and start focusing on solutions. So for those of you who don't know us, but many of you do, but of those who don't, we are QPQ International. It's a digital platform that is created in support of green energy project developers worldwide and investors. The primary focus is to accelerate development, advance and financing, and secure world-class funders and partners for developers in our network. So just to explain you, so this webinar is actually hosted as part of our Green Energy Project Funding Accelerator Program. So the program is primarily for developers of green energy projects, that is renewable energy, waste energy, hydrogen, and energy storage projects, utility scale projects worldwide. So in terms of the program, we will be facilitating series of events and webinars to support developers in these 4 subsectors that I have just mentioned. Today is the first series that actually addressing and talking to developers of renewable energy and energy storage. So we will also have, the Funding Accelerator Program, as I mentioned, is actually the main focus is to support developers and accelerate financing of projects. Many of you know that we have hosted last year Green Energy Summit, which have attracted over 250 projects, which we have, and we shortlisted green energy projects. We shortlisted almost 50 out of them. So 75% of those projects who have participated in the last event are now in due diligence and advanced stages of negotiation with world-class funders and partners. So for those of you who don't know, the summit actually took place 3 months ago, right? That was in end of November. If I'm not losing time already, I've lost track of time now with all these crazy events that are taking place. Anyway, so now we kind of decided to build on the success and build on the momentum and extend it to kind of ongoing initiatives. So the program is opened to developers throughout the year. The developers are going through stages of coaching and advising from our advisors. You can actually see what this program consists of following the link that Vlad will just share with you in the chat window. And in terms of, then the program also culminates in the annual event, which is actually the Funding Accelerator event. Last year, the event have attracted over 350 international professional investors from all over the world. So we are planning to have this year much bigger. We're preparing for it. And we want to also have our projects much more prepared and give them much more support. Hence, we're kind of extending it into the whole annual program. right? So you can check out there. So, and the event is primarily, it will be for shortlisted and groomed projects that we have shortlisted through the program. And then they will be participating in the event. And the event is for professional investors, private equity fund managers, asset managers, IPPs, and so on. We already have a very large network of investors whom we work with on an ongoing basis in excess of 200. But then event also attracts people from outside of our network. Anyway, so now I think that it's enough for introduction. Now we've got quite a large audience here. Fantastic. Well, thank you for being here. And this is with my absolute pleasure and pride. I would like to invite on stage one of our advisors, part of our team, good friend, actually, who's been with us from from the beginning. This is Harry Stepanyan. So with more than 35 years experience in power engineering, conventional power generation, renewable energy, and water desalination, and during 30 years actually spent in primarily working on major projects in developing countries, including Southeast Asia, in MENA region for international engineering firms, advising governments, and so much more. Harry, thank you so much for actually supporting us. I'm super excited about your presentation.
My pleasure.
Slides and so value loaded, guys. Whoever is here, I encourage you to download slides and enjoy the presentation. Thank you very much.
Great to have you here, Harry. So the
Thank
handouts
you.
for people, handouts are available on the right-hand side. You should see them. And also in the chat, I sent a link to our funding accelerator program. So now enjoy the presentation from Harry, and the Q&A won't be straight after his presentation. Perhaps after the second speaker, Marcel will finish with his presentation. If we have enough time, we'll have kind of a joint Q&A. Yeah.
Okay. Enjoy it.
We're both gonna leave the stage, so to Harry. So we are here with you on the background. So if you have any issues or questions, you just post them in chat, and we'll try to address them from our side.
Okay. Thank you very much, everybody, and welcome to this quick talk about. I'm trying to fix this. Okay. Right. Okay, we are getting there. Thank you very much, everybody, for coming. Well, it's probably early morning for some of you or late evening, but I think it's worth it actually as a renewable energy passionate to get together and see how we can help each other to move forward on renewable energy projects. Actually, what I'm going to talk to you about, but before that, I think the introduction, I think Oksana and Vlad, they did the presentation, the introduction. So I think there's no need to talk about it anymore. What I wanted actually to get into is quite a few issues that many investors and developers mainly are keen to know, and when you get into that, the harmony of getting the developers and investors, there are lots of work needs to be done at the background in order to get into that successful stage of the project. So I'll talk about one of the important issues in any project is the what we call it the investor readiness and project bankability. This is one of the very important points in making the project financing successul. I will talk about the investors checklist a little bit, because most of the developers may be coming from a background just like me, from engineering background, who would know a little bit about project financing, and what the investors who are usually coming from financial background like bankers, lenders, and so on, who look to the project from different perspective than most of the developers look at. We will look to also to the issues that will stop the investors, ignoring or canceling some of those projects. We will look quickly into those items. We will look also to the what kind of investors, partners you would like to see, how you choose them, and also the source of fundings for your project, where you can get those types of funding. And finally, we will look to very important issue, which is basically is linked to the exit strategy. If some of you also is interested in it, is the due diligence, which is part of any project financing. I'll look to the investor readiness first. The investor readiness is a degree which the project developer is 4 important things. One, the key points that the investor wants to know about your project. Even if you are a good developer, but if you are not able to pinpoint the important points that that distinguish your project from other projects, you can't guarantee your project is going to be bankable. The other one is how you can position your investment, how you can adapt your project so that it will become attractive to the investors, and how you can. And 3, how to present your investment opportunity from the investor's point of view. It means that how you can put yourself in the investor's position and see whether your project is going to be bankable or not. And lastly is, of course, the investment terms and conditions. Unfortunately, most of the investors, they look into the legal terms of their investments, because that's their security, their guarantee. So those 4 items are very important to consider when you talk about investor readiness. It's very time-consuming, frustrating process in order to get all this kind of information about the project, but it could be rewarding at the end. So you might spend a lot of money on it because in certain projects, 10% probably of the financing goes into 10% of the investment goes into the financing, and there will be a hell of iteration of the terms and conditions. You go through several reviews and revisions in order to get those terms and conditions right and acceptable by both parties. In the degree at which the project developers can assist, I can see it in 5 key elements. The first one is your strategic planning. This is probably one of the first questions that any investor will ask you. Where do you want your project to be in the next 5 years or 10 years or 25 years? We know that most of our renewable energy projects are probably 25, 30 years lifespan. So they want to know that strategic planning you have. And you need to prepare that bit very well in order to assurances that this is a long-term project that you are trying to finance. The second item is, of course, the financial model. I have seen many financial models, but unfortunately, financial modeling is not an easy task. You have to contribute every small parts that is concerning you, whether that is related to the taxes, whether that is related to the operation and maintenance of your station or power station, whether it is related to other expenses, overheads, expenses. All those needs to be incorporated into your financial model, And of course, you are going to take your, for example, levelized cost of electricity. For example, in that you take, the degradation of your, say, if you're talking about, solar, all this kind of things needs to be all embedded into your financial model in order to come into a very comprehensive financial model that the investor will, that you will give to the investor the confidence. Of course, legal part, this is obvious. No investor will get involved or invest in any project unless they have a strong legal binding contract. The other very important key element I find is your people, the people who are involved in the project from the inception, from the moment that you created that project until the end, until the financial closeout. Those are the key people who are going to make the project successful. So those people are very important for the investors, and you have to maintain those people in your team in order to give the assurances to the investors that those people are going to take the project from the financial closeout into the COD and later on during the operation and maintenance. And finally, the process that will cover the entire investment period, whether that is the concession period, I mean, whether that is 25 years, whether that is 30 years, it doesn't matter. The very important how the process that will make that project successful over the lifespan of the project. When we talk about investors' perception about the project, we need to remember always that those people are professional people. They have a team of people from different disciplines. They come from technical, financial, economists, you name it, legal. Those people, they will all get together in order to evaluate your project. So they will look into a very long and tedious list of issues, starting from where your project is, in which continent your project is, in which country your project is, and go down into the region where you are planning to put your power station, or even they look to minor details about the individuals who are involved in this project, doing vetting, scrutiny, and so on individuals, the background check. So you can see that those people, they go in a wide range of vetting process in order to understand whether this project is feasible for them, whether it's worth it to take the risk of investment or not. And I have seen lots of renewable energy project financing checklists, but believe me, the shortest one is the one that I'm showing to you, which is about 30 items. I have seen probably investors having a list of 50 or 60 items that they need to consider. And of course, they have like scoreboard, weighting, criteria, so that they can do the evaluation. They do SWOT analysis. They do all those kind of techniques. They use those kind of techniques in order to evaluate the project. And at the end, for them, it's about the risk, whether it is financial risk, whether it is the technical risk, if it is a new technology, a technology that never been used before. for them, it's about risk analysis, whether they need to take that risk or not. The next thing that I wanted to talk also briefly about it, what stops the investors from committing funds into projects. I listed a few. I'm pretty sure you will have more items to add here. But what I wanted to say about this, and probably Oksana, she touched this issue, is today what's going on in the world. And she asked me this question, and we had this discussion yesterday of what is going to happen, you know, next after the Ukrainian war. We might see a change in the landscape, for example. There will be a complete shift, probably, from investors' perspective. They will try to avoid regions where they think that they are vulnerable, for example, whether there's political risk, whether there is an economic risks. So all these things we might turn the investors, say, from investing in one region into another region. And don't forget, for investors, it's about moving their assets, moving their from one region to another, where they can see they can invest their money in a safe regions. They look, for example, now if you want to go and invest in Russia, you need to do a new revise or complete reviewing of your, for example, your insurance, export credit guarantees, all this kind of things. You need to have another look to it before you go and invest, say, in Russia or Central Asia, like we have seen in Kazakhstan before. Before you, the investor will jump into the next project there. And this is the essence of it. We can see that the market perception keeps changing over time. Probably you have heard about the oil prices are going up. That's probably will put more pressure, for example, on developing of the renewable energy. So the entire landscape we can see globally is changing when it comes to the renewable energy. Probably there will be more emphasis in the future. Probably they will the risk analysis for the projects will change, and so on. And of course, when we are talking about countries where we expect that there will be you know, change in law, I've seen many cases, actually court cases, where there is you know, cases where you know, the change in law has happened in the country. For example, in India, where you know, the government imposed tariffs, limitation, and so on, where the individual or private investors took you know, the utility board to the court on this. So those kind of things, they all are very important for the investors that might stop them for investment in certain regions or certain countries. I wanted, I think I wanted to put the exit strategy at the end, but it came here because I was bit presentation. But let me just briefly say about talk about the exit strategy. I've seen many developers actually they rush into the exit strategy after the financial closeout. To me, the exit strategy is not about collecting you know, the investment of your money and leave the project. Actually it is to improve the chance of sustainable outcome of the project. In other words, that how you can take your project to the next level, how you can bring investors who can help you to go into the next level of your development. In other words, would you like to develop your next project vertically? You want to develop it horizontally? It's up to you. But for the exit strategy, for most of the developers, needs to be a new start, how to expand your projects and take it to the next level. The important things when you consider your exit strategy, there are quite few things. The most important one is how you can align with the investors board and management. It means that how you can get easily with them, how you can introduce yourself as a developer to the investors management, how you can get along with them so that they can take you in and start talking with you seriously about the exit strategy. Ensure the investors has an M&A experience and leads, whether they have previous acquisition or merging experience. That's very important. If you probably as a developer, you don't have that experience, but if the investor doesn't have that experience as well, I think you can see that exit strategy, your exit strategy will fail. So that's very important to consider it. If you don't have the experience in this before, you haven't done it before, go and hire somebody to do it for you. Don't go by yourself and start negotiating the exit strategy. And of course, always prepare that any buyer will come to you and do the due diligence of your project. No buyer will go and spend a cent without doing a proper due diligence on your project. And of course, it's like anything else. It's like buying and selling house in an auction. Always there is this investor tension, and that's a very good thing, because that will basically help more investors to come and approach you and evaluate your project. And of course, last thing is keep the momentum always, because if one exit strategy doesn't work, it doesn't mean that it's going to fail always. You can learn from that lesson and you can go to the next one and make it successful. In terms of selecting your partner, most of us can't do the project by themselves. They are too small, and I've seen it with most of the clients that we work with. They are, 2 people, 3 people. They're small companies, and those small companies, they can't do, medium or large scale, say, solar farms, for example. They need partners, but those partners, they don't come, easily to you. You need to put a plan of what kind of partners you want, business partners that you want to come on board to make the project happen. And that the first thing will come to your mind is this, of course, how you can build this trust between you as a developer and probably the investors who are coming to build that partnership. On the short term, you need to share your clearly you need to share your objectives and how you are going to achieve your goals. That's very important for any other partner who is coming on board to understand your objective and goal. And of course, on the long term, you need to know where you are going to take your project and how you are going to expand your projects in the future. I think, I don't know whether we are running out of time. Vlad, how much time do we have?
We're halfway.
Okay.
Yeah, we're halfway. So I think, yeah, we still have Marcel to present. So if you kind of close, if you're wrapping up, then I think you're on time.
All right, give me 5 minutes. I will finish this. The things that when you look or avoid in your partners, when you select your partner, what kind of partner you want to come with you? Minorities versus majorities, equal shares, equity investors, employers reward, those things that always are very important for you when you select your partner. I will, well, I wanted to talk about funding your project, but if we are running out of time, I won't just skip and go to due diligence because that's very important. The three things that needs to be taken into consideration is first, an attorney that needs to review the documentation, all the purchase and sales agreement. Second, financing, of course, needs to be all secured in an advanced stage of your due diligence, and the buyer due diligence needs to be completed. So those are the three major items that needs to be included. What needs to be included in the due diligence? Project financial, of course, this is the major part. Taxes, legal regulatory compliance, environmental compliance, grid connection, connection with off-takers, of course, off-taker relation, real estate, the land lease, etc., system and processes, IT, all the processes that you are using for your O&M, etc., operations of the assets, and the human resources, people who are working for you. I think for this, I just want to say a few things about to have a smooth process for due diligence. Start early, consultation, data room security of your due diligence, be complete, confidential, and being patient in order to get a successful due diligence. And by this, I finish my presentation. If anyone has a question, please.
So, Harry, thank you so much.
Sorry, Oksana, for interrupting you. Great presentation. Really appreciate it, Harry. So what I suggest is, so we don't kind of run out of time before and don't kind of dig into Marcel's part of the presentation. I suggest whoever have questions, you guys please post it in the chat. We will collect the questions. And then in the end, we'll, as I mentioned earlier, we'll combine them together, and we'll have both Marcel and Harry on the stage. So we'll ask some of the questions.
Right.
Yes,
thank you very much, everybody,
Harry,
for
thank
listening.
you so much. I just wanted to also thank you and apologize that we have given you so little time. I know that you want to give wealth of information and your lifetime of experience and share it in such a short span of time, but you've done incredible work of actually putting it on slides so people can download it and refer to it. So dear friends, colleagues, whoever is listening, and we've got like 130 people in the room now. So, and then of course, a lot of people are registered, but they will be receiving replay. Vlad, we need to make sure that whoever receive replay also receives slides. But Harry, thank you once again. I have to say that
my pleasure.
Indeed, such a short, such a short time to express and share so much wisdom and knowledge. Ladies and gentlemen, this is pretty much process that we go through when we work with projects. as you understand, and Harry rightfully noticed that, you know, a lot of projects are initiated by very talented engineers, businessmen, and so on, but actually understanding project finance and understanding what really investors need and are seeking is a completely kind of different science, right? So we've tried our best to give you a bit of insight into mindset and what investors are seeking. We actually have a lot of various other checklists and other things that we use in order to prepare projects for due diligence, in order to coach developers to negotiate effectively, in order to structure correctly project finance strategy, in order to position yourself to optimal negotiations, right? So for this reason, of course, you know, that's why the program is like a very long program where you get enough face-to-face time with our talented advisors. So yes, we look forward to your submissions for the Funding Accelerator program. And here I'm with full pride and absolute thrill inviting Marcel Steenberg on stage. Sorry, Marcel, for cutting into your time. We were not too bad. So, you know, Marcel is a celebrity and a champion of renewable energy in South Africa. You know, so I kind of, when Vlad spoke to him and said, listen, you need to talk to Marcel. He's awesome. He's doing such a great things. So we invited Marcel to talk to our network and share some practical experience, because Marcel basically, he started with biofuels and then moved into waste to energy, and then now conducted energy audits and carbon reduction strategies for very large companies. He is a member and he is on the board of many various companies. He's a speaker, champion, and so on. So thank you so much, Marcel. I'm, you know, giving stage to you. Super excited to listen what you have to share with us tonight.
Excellent. Thank you, Oksana, for the opportunity. Good evening, everyone. I can't see myself, so can you see my screen? I'm assuming yes. So this evening is, yeah, thank you for the opportunity.
We see you, but we don't see your screen.
Oh, really? Thank you.
You were sharing at some point and then it disappeared.
Thank you for that, Vlad. Apologies.
Okay, that must be just me, because I see quite a few people who says they see the screen. So I assume it's okay then.
There we go. Now, Vlad.
Okay, yeah, now I can see it as well. Yeah, perfect.
Excellent. So good evening, everyone. I am Marcel Steenberg. I've been in the renewable sector now for going on 20 years. I've been a project developer. I've been an entrepreneur in the green space, company owner. And tonight, just sharing a couple of minutes of my experience and renewable energy and energy storage from an African perspective. I live in Johannesburg in South Africa. I've traveled to at least half the countries on the African continent, advised governments, built plants in remote places, been to wonderful things. And tonight we're really going to hone in just on what I think is a little bit of the context of how we got to where we are in the renewable sector over the last 10, 15 years, and a glimpse into the future that I see for us. So Ascent and my partners would be terribly upset if I didn't take the opportunity to just present and market my company for half a minute. So apologies for that. I am not, won't be too salesy this evening, but Ascent is really a independent power producer on the African continent, focused on implementing smaller embedded solar. So we're not a utility scale power producer. We think that Africa has a unique opportunity that sits in the kind of sub 10 megawatt space, and we're very focused on that. Currently in South Africa, very focused on what's called the C&I sector, the commercial and industrial sector, and very interested in and deploying battery energy storage. And we're going to talk a little bit about that going forward. Also, smaller scale CSP, concentrated solar. I think everyone is very familiar with the slide. I show this wherever I go, and people, I've been to invest in meetings where they've asked me to please not show this, but I think this is probably the greatest and most powerful picture for why someone would be in energy in Africa. And so whenever being in energy in Africa for 20 years, I've been, it hasn't been an easy path. I think sometimes being first is not always as glamorous as it seems, but I always come back to this picture that inspires me, that there's lots of work to be done on this continent. So approximately half of the 1.3 billion people on the African continent lack access to power. It's roughly 650 million people. I think these statistics we all know. And in the interest of time, I've uploaded my presentation, so all of you will have access to this. Just the middle point speaks of the fastest growing markets, really something that Ascent is focused on: South Africa, Namibia, Kenya, Ghana, Egypt. You'll notice that Nigeria is in there. Having worked in Nigeria extensively in my career, it's just not a focus area of us, but it probably is the largest market, so it has to be on the list. And I think if we think about what mobile communications have done for the disruption of fixed line operators on the African continent, decentralized energy, the same opportunity exists for us as developers and business owners in decentralized energy in Africa. So when we think about Africa as a continent, there are 52 countries, if we exclude Mauritius and Madagascar, but it is a single continent. And a lot of work's been done over the last 2 decades of developing what's called power pools in order for countries to share renewable resources. So we know about the South African power pool, which is really the Southern African portion. And in the old days, Eskom, our utility, used to trade power to places like Namibia, Zimbabwe, Botswana, Mozambique. This same power pool now is open for us as renewable energy large-scale developers to sell into these bigger African markets. We see the same in the East Africa happening in the East African power pool, the West African power pool, and Africa really as a continent developing as a market very open to trade renewable energies. In Southern Africa, the focus is slightly different. So for us as a company, we see the market, and we'll get into this a little bit, split into utility scale developments and the smaller scale decentralized stuff, what we call the C&I space. Ascent, again, very focused on the C&I sector. And I think I noticed some people from the US and all over Europe, and I don't know if you're familiar with what's happening in South Africa, but I'm in my office right now because at home I've got load shedding, which is quite ironic as someone in the renewable energy sector, but I also have two teenage children. So to avoid competition for the internet when the power's out, I'm in the office. There's roughly a 20 gigawatt gap between what the utility is currently generating and what the market requires. And this is really this total addressable market that we estimated somewhere in the region of 30 billion US. Currently, renewables make up somewhere between 10 and 20% of the energy mix in South Africa, growing faster than our conventional coal-generated plants. And I think there's also, like in corporate South Africa, a very large drive for companies to focus on future-proofing their energy mix. So we see a lot of companies focused on ESG and sustainability, procuring green power from companies such as ourselves. So Africa and South Africa, and again, I'm proudly South African, but we're not alone in this. South Africa led the charge in what was called the Renewable Energy Independent Power Procurement Program, the REIPPP. The first round was run 11 years ago. A decade ago, we've had 6 rounds of projects that have been bid in this manner, and it's been hugely successful, copied all around the world by countries and both in Africa and abroad, in its manner, in how it procured, and we'll touch a little bit. Uganda has run something very similar, Zambia, Namibia, Botswana. So we see lots of African countries running bidding programs to attract renewable energy investment and renewable energy developers. So the trend across the continent, I think what's quite important here, if you look at the third column in pricing, is that we're going to get to some kind of universal bidding price. But most of the large-scale utility size projects have been a little bit of a reverse auction. 300 bids in round 6 in REAP were just short of 300 rounds were submitted. 27 or 28 were chosen. So we see roughly a 10% success rate. And it really is, a race to the bottom for the large developers. So on their side, obviously they got cheap funding and scale. And the country benefits because some of the cheapest electrons on the grid in South Africa are currently from renewable sources. And those numbers quoted there are rand cents, so divided by 16 at today's rate to get to a dollar cent. You'll see it's very, very competitive rand per kilowatt hour pricing. And we see similar things happening in places like Zambia, Uganda, Senegal, Rwanda, Malawi, Mozambique. Again, my presentation will be uploaded. You can take your time and go through that. This is public knowledge that I'm sharing with you, so it's not confidential in any way. And so the outcome of the REAP bid and this slide is quite important, because if we look at the South African map in 2011 versus the South African map in 2018, we see that more than 6 gigawatts of installed capacity has been procured, a total investment of almost 300 billion rand, $20 billion. The country has attracted, thousands of jobs have been created. In the bidding process, there's a scaling process, and part of your criteria, a big focus is placed on socio-economic development. And the projects that are chosen are often in areas where there's a need for rural development. And so we see a lot of 280 million rand that has been contributed to enterprise development in those regions, often poorer areas. And so when we look at the map in 2018, it looks a whole lot more diversified. Most of those projects are wind and solar projects. There's one concentrated solar plant in the bottom left-hand corner there. Traditionally, South Africa generates its power from coal, and so we use almost a gigaliter of water per megawatt hour produced. And so the second last point there, water savings, this is a big plus for us when we're thinking about renewable energy. So I'm just sketching, taking you into a direction, apologies, but just sketching the landscape for you. So what we've seen in elements of best practices across the African continent is really, where governments have been able to partner with the public, and the process has been very transparent. Ownership has been passed on to both communities and developers. Planning has not been in government projects in South Africa. We often see overruns and often see time delays. In the REAP process and in other bidding processes in Africa, there's been meticulous attention to detail in delivering on time and on budget. And I think that's just such a success when we think about collaboration between governments and public and the public and private investors. So wind in Africa, we've seen a large uptake of wind, photovoltaic, PV, concentrated solar, and there's even a couple of, in South Africa, a couple of test plants around wave energy. I think this is exciting. South Africa's got a very large coastline. Obviously, Africa in itself is a very large coastline. This is the slide and where the presentation kind of pivots a little bit into the future. So when we, none of us have crystal balls, and up until 2 weeks ago, before the mess in Europe, I think we all thought that the world was on a better trajectory. But this gives us an insight into, of the biomass, of the renewable sources in Africa, what the focus will be placed on in going forward. I was having breakfast with a friend of mine who's the CEO of a trading platform in Africa, the largest one. And we were just talking about how, 5 or 6 years ago, when we were talking about renewables, biomass and biogas were mentioned a lot, hydro. At the moment, it really is a solar story and a battery energy story. And so when Ascent thinks about this future, again, we're a renewable energy company, but we think about deployment of speed, we think about risk, and we think about bankability. Solar PV is really where our focus is right now. what we're seeing in our business model is, these perfect conditions, the market has been set. Africa doesn't really have a stable grid. So when we're thinking about the rise of the trends in Africa, we have large corporates that have mines in Africa, operating in different regions. And a big focus of them is decarbonization, decentralization, so smaller plants, but multiples of, not necessarily, utility scale behemoths, but, smaller 10, 20, 30 megawatt plants, servicing a mini grid, a community, a mine, a hotel. And then obviously the trend of digitization. We're seeing, and one of our investments is in a company that that has the code to turn, our assets on and off remotely. And this energy trading platform is written on the blockchain and very futuristic, but from a client point of view, very simple to operate and very transparent, very, very optimal. So, what have we as Ascent done in the space? And I again, speak of just solar and battery energy storage, the nexus of where these two things come together. This is one of our investee companies, a company called Renewable Energy. This is just some of their reference sites. And the opportunity we see in that, we think that as Ascent that Africa will really leapfrog the world in terms of renewable energy. We think that, offshore wind is a massive opportunity, solar PV, CSP, and this transition, as the continent grows to almost skip the fossil fuel trend and move directly into renewables is really, the trend that we're backing. Energy security, I think, so we refer to ESCOM, but I think these same utility scale operators in countries in Africa, the same rationale applies. And then financial cost savings. So when we think about the grid in South Africa as it exists today, solar power is some of the cheapest electrons. Globally this is true, but just as a South African sitting in South Africa right now, solar energy is some of the cheapest energy we can procure right now. Depending on the region we're in South Africa, we've got 238 different municipalities. Depending on which municipality we're in, right now we can offer a client a 20 to 30% saving on the electricity price. So it's compelling, a clean solution at a stable price increase, not 30 or 40% as we have been in the past, potentially off balance sheet to the client. That's our offering. So when we think about, the economics of our offering traditionally, for people building their own plants or thinking about making the transition to a cleaner energy supply, there's a financial or economic bit. There's policy and institutional issues, which we spoke about a little bit earlier, and capacity building and technology transfer. Ascent's business model is really to own that and provide the client with a turnkey solution. So our investment model is removing the capex barrier for a smooth transition to renewable energy. So our model is really either a power purchase agreement, a lease agreement, whatever's easier for the client. We call it a hybrid model, where we become their energy partner in their business, whether this means, battery, solar, heat pumps, whatever their energy requirements are. We will take that off balance sheet for them and play almost a mini green utility in their business. Again, this is just some of the work that we've done and currently doing. Renewable Energy, which is one of our investment companies. Some more. Again, apologies for being salesy. This was in the presentation. I wanted to speak about the three reference projects I want to just focus on. Harry made reference to levelized cost of energy. And so the three projects we're going to focus on now, two of them are lodges and one a large scale mine in Africa, where we were able to do so the picture you're looking at right now is and just so that we're on a no names basis and don't, risk our client's identity, I removed the names, but this is in Mozambique. I'll give you the country. And this is quite a large installation for the client, where we've put up a solar farm and battery backup to this particular lodge had no access to the grid. Their power was supplied by a diesel generator. And this almost halves the electricity bill. So we did this for them as an off balance sheet solution. Similarly with this one's slightly larger. This is 1.5 megawatts with a 3.5 megawatt hour battery backup. This, as far as I know, will be one of the biggest batteries in the Southern Hemisphere currently deployed. And again, so our levelized cost of energy as a over life cycle is cheaper than that of what their diesel generator, so grid parity would be. And then thirdly, this was, again, this is a mine in Zimbabwe, just on a no-name basis. This is through one of our investment companies called Eternal Solar. Eternal is, you know, also a developer of energy projects and solar and battery hybrid plants. This particular site had 6 wash plants on the mine, totaling about 2.2 megawatts installed capacity. And our brief was to reduce their almost 7-8 rand kilowatt hour levelized cost of energy. And after the homework, and this is some of the, just again, there's no IP in this, but just sharing with you how we got to, you know, being able to save our clients somewhere between 40 and 50% of their current energy cost through implementing a battery energy system as opposed to, you know, running a diesel generator. So obviously, you know, for a client, they think of levelized cost in the sense of CapEx, OpEx. And so when you're deploying larger CapEx, your OpEx reduces. In a diesel generator, one would argue that you have a very small CapEx. And so your OpEx, you can afford for your OpEx to be expensive. And I think that was true in a post-decarbonization world. I think for mines in Africa, there's a really big trend and focus on decarbonization, you know, doing the right thing in terms of, you know, their green agenda and sustainability. And as Ascent, we, again, want to be their partner in that transition. And then, you know, this slide just takes us into a little bit into the future. So when I think about the world, you know, post-COVID, we've just seen an incredible uptake of a shift into renewable energy. We also think that CSP provides an opportunity for us to be one of the lowest cost producers of electrons, you know, into smaller applications in Africa. So traditionally, we know that CSP, you know, is only really viable on large scale. In South Africa, we have a plant called Bokpoort that runs in the Northern Cape. It has an installed capacity of 50 megawatts. It's producing at about 110% of that capacity, so it's been hugely successful. But it was also super expensive. And the, you know, limiting factors of CSP traditionally is that it's only deployable on a large scale. Therefore, one would require a large grid with no grid constraints. But CSP in its nature also, you know, provides a storage mechanism. And so for us, thinking about the future, that's very exciting. So Ascent has exclusive rights to a technology for the African continent on small scale CSP, developing our first reference site now that is a deployable plant of 2 megawatt hours, 2 megawatt installed capacity with 18 hours of storage or battery backup. I call it battery backup, but electricity backup, heat backup. This is what it looks like. It's a little bit of an insight into the future. So I have a saying that says sardines are fish too. So in Africa, we think about, you know, smaller scale plants, multiples of rather than large plants. This is the module of the current plant that's running. The test site is at is a 60 kilowatt hour plant that's been running for the last 5 years. We're now scaling that, and in about 1.5 years, we'll be ready for deployment of these plants. So again, thinking about the future, we're thinking about how do we compete with fossil fuels? And this is my final slide, and I'm sorry I've taken 5 minutes extra of your time, but I think this is kind of what contextualizes the whole renewable energy or, you know, energy transition for me, and what has been incredibly encouraging in South Africa. In 2011, I actually attended COP17, and our government really got behind the, you know, the concept of this just transition into renewables. And our IRP, which is our integrated resource plan, for the first time made an allowance for renewables to be procured by the Department of Mineral Resources, or at the time it was the Department of Energy, and it's opened up a market for us. And through REAP and now through the CNI kind of embedded projects, we also now have an allocation in South Africa where you can generate up to 100 megawatts without requiring a license as self-generation. So we've seen a lot of mines adopt this 100 megawatt allocation and producing their own energy. And this is really what I think is and creates the landscape that attracts investment into Africa. So I think when we're thinking, and South Africa, our National Development Plan really plots this path out to 2040, is what does the future look like for us as renewable energy developers and investors? And this gives me confidence to know that we will have a market, and we will be on it, and that our country really does support a just transition into low carbon electricity. And that was my short story. I apologize if I got some of the facts wrong. This is really just my interpretation and my view of the world. And I really welcome your feedback and your criticism. I'm very open to it. So yeah, happy to take some questions and hear from the audience how we can add value.
Well, thank you, Marcel, for your presentation. Really appreciate it. Yes, that's indeed, we got some practical perspective, and it's very interesting. And many of you know that Africa often, primarily focuses on smaller size projects anyway, and CNI and other projects. So it's quite a good practical example of that. We still got quite a large audience here. So ladies and gentlemen, thank you for being with us. So for those who want to leave, please feel free to do so. Thank you, but we are here for those who still have time. We're happy to, we will answer some questions, and we have received some really great questions. Perhaps you can stop sharing the screen, Marcel, yeah? So we can, or who can do that? So now, number of questions that we have received, and I will address the kind of first in line here, and then it has actually been repeated many times, is what kind of project actually would qualify to participate in our funding accelerator projects, what kind of size of the project, and what stage of the project that would be. So I will start with in terms of what stage of project. So as so investor readiness, it's Harry have kind of covered that very well, and we, you all know that investment will flow in when the project is completely kind of ready for financial close and ready, and you have ticked all the boxes. Having said that, now the investor appetites vary depending on geographies, depending on investors' mandates, and we can, in some countries, we can start talking to investors with about projects that are quite early stage. Having said that, our qualifying criteria is projects that are at least halfway through their development phase. But then, of course, then we need to kind of guide you in terms of to complete and tick all the boxes and checklist to ensure that investment does happen in the end, right? Then, of course, also there are in some investors who are interested in pipelines of projects. Then, of course, qualifying criteria that project has to be initiated by professional developer who understand what they're doing, demonstrate ability to complete those projects, demonstrate competent team, and so on, right? And then, of course, if it's and then it can be ready to build project as well, depending, So I see very often, say in Europe, Australia, in US, investors are prepared to go earlier and earlier because market become, a kind of more competitive. In other countries and more emerging markets and countries with higher country risk, of course, investors expect and want to see kind of ready to build projects. They want to see that security that they will indeed, project will indeed reach, complete its development phase, right? So it goes from project to project. I think the main qualifying criteria is that Again, first of all, for us is geography, then competent team, then of course also viability of the project and how well you're prepared. In terms of project size is we as a platform, we work with professional investors and professional groups in our kind of network. We have investors like BlackRock, EIG, Global Energy Partners, like I Squared Capital. We also large IPPs like Marubeni, NL, Toyota, and other things. You know, that's why we're kind of priding and our brand promises that we actually will secure you world-class partners. But for this reason, projects tend to be larger size. But again, we have developers and investors who look at projects smaller scale as well, but often is probably, you know, nothing below 5 megawatt really, you know, and that would be very, very, you know, so really 10 megawatt, but often probably 60-70% of the time the project has to be above 20 megawatt. And then, yes, and of course, ability to demonstrate pipeline, because if investors, as Harry have noted, you know, if investors go through this such a length at doing due diligence and spending so much resources, because for them, you know, investing $5 million and investing $100 million will require the same amount of time and due diligence and resources. So often, the bigger the better, most of the time. So we're welcoming, of course, and we're very well equipped to coach and guide and advise larger scale projects worldwide. In terms of geographies, the question that has been asked, we actually are worldwide. You know, a lot of interest is in South America, in Southeast Asia, Australia, Canada, Europe, MENA region, you know, North Africa, Africa, you know, so definitely happy to support as long as the project is good and has some good fundamentals. We can also guide you and coach you. Anyway, long speech, my goodness.
Yeah, no, and good answer to this question you gave in one of the previous kind of conversations we had, that we are geography agnostic and technology specific. So we pretty much do, you know, we can look at projects anywhere in the world as long as the country is politically stable. In terms of the subsectors, Oksana already covered this, you know, full spectrum of renewables, and you know, waste to energy, energy storage, hydrogen production. This would actually will bring me to the next question as soon as you're done, Oksana.
Yes,
One question from the audience, actually.
Yes, please do that.
Yeah, so considering that, I don't know, for those of you who are not keeping an eye on the chat, just a quick announcement before people start leaving. Our next webinar will be happening on the 5th of April, and the topic will be hydrogen and waste to energy. And we got one of the questions for Marcel, but perhaps we could get a quick input from both of you guys. And what is your opinion on the future of hydrogen? So, Harry, since you're unmuted, if you want to go first.
Yeah, concerning hydrogen, I think there are lots of potential. Probably some of you have heard that some of the Gulf states, they're putting their investment now in the hydrogen, but hydrogen is still it's expensive fuel compared to the other, and it's still that transition of making more economic to utilize in the future. And the most important thing with hydrogen right now is coupled with the renewable energy, and that's where the price of the hydrogen they think will come down. So there's a lot of potentials for hydrogen, but still lots of countries are a bit cautious about it, because if you compare it, for example, with the hydrogen-driven vehicles compared to the electric vehicles, still it is well behind.
Very good.
Marcel?
Thank you, Harry. Marcel, if you want to unmute yourself and give us your view on this subject. So what is the future of the green hydrogen in your opinion?
I mean, I agree with Harry. I think that right now, you know, I don't have a concept of what a hydrogen looks like, you know, so there's a lot of hype around hydrogen. It reminds me of, you know, the biofuel space 20 years ago. But how do I sell a hydrogen to a mine in South Africa? You know, so that value chain requires a lot of investment and a lot of unlocking. In South Africa, there's a lot of government support in the green hydrogen space. We identify that there's a lot of manufacturing opportunity. the complexity of hydrogen right now, for me, I think that it's a few years away, and I think there's we need to focus on what's in front of us in a just energy transition. I think we also have to, kind of realize that hydrogen is still right now in its form a fossil fuel, so 90% of hydrogen is derived, the energy that produces that hydrogen in South Africa anyway would be from coal. And so it's a little bit false economy. And so I think we need to just, consider this in this race down finding a hydrogen and marketing and commercializing a hydrogen. It's a very energy intensive process, and until we've decarbonized the grid, it might actually have the adverse effect.
Well, we see quite a lot of green hydrogen projects converting into, green energy into hydrogen, so, and that's definitely, in my view, will address market gaps, that are currently, not addressed, right? So we have green energy to go into the grid, but how do you utilize, green energy sources in, say, in marine space and other, and the cars and so on. But I agree with you. I think we had this presentation also specifically on hydrogen during our Green Energy Summit, and we had a wonderful lady from Shell, and she's leading very large projects in hydrogen, and she said it's very much the infrastructure. There's a lot that needs to be addressed about that. Producing hydrogen is one thing, but infrastructure. So yes, well, any other questions? We still have over 90 people in the audience, so people want to hear, obviously.
Yeah, we have a lot. So one question from our friend DS Mahal, I think it is, from India. He gave quite a extensive, and basically combined a couple of questions together, but it all comes to core questions. Are investors ready for large capital projects? So basically, what DS says, that commercially proven plug and use renewable energy like biofuels, solar, wind, energy efficiency need urgent global scale up to speed up and invest up, whereas new clean fuels like green hydrogen, drop-in fuels, e-fuels, energy storages need push for commercialization at scale for economic viability. Renewables and clean green energy implementation at local levels is the only actually solution to cushion current energy crisis sustainably. So again, the question is, are investors ready for those large capital projects?
So, and can I answer that, and then of course I'd love to hear Harry's perspective, because he actually been part of the, advising all these large capital projects, and he knows inside out. I can only speak from the perspective of our investors, and the answer is yes, they are ready. The challenge is the readiness of the projects. And so the capital is there. Very often projects are just simply not prepared for investment. And often even best intention to invest are derailed by lack of preparation and understanding of project developers of what actually needed to be in place in order to attract world-class funders and large capital. So yes, this is my answer to it. And this is our kind of ongoing challenge.
Yeah, sure.
The purpose of this program, really, to kind of accelerate this, right? Harry, you tell me, what do you think?
Well, in general, yes, I agree with you. I mean, the market is right now is in that transition and going to the green hydrogen and even gray hydrogen. There's no issue with that. The only thing is that the automobile industry needs to go into in parallel with this, so that there will be a demand for hydrogen and will encourage investors to come forward and invest more in the industry.
Yes, but yes, exactly. But I think that you're still addressing hydrogen here, right? But I think the general question whether investors are ready for big scale capital projects, right? But I agree with you. And
absolutely.
Yeah.
I mean, we have seen mainly in Saudi Arabia recently, there was one large project was signed involving green hydrogen. There's one here in UAE is ongoing. So we can see that quite a few projects are happening, at least in this part of the region.
Well, I think Abu Dhabi signed the, the kind of now the project of 4.5 or 9 billion. I don't remember exactly, but also, but I think that's the hydrogen project. Of course, these are all kind of long-term projects, take time anyway. So, any other questions?
Yeah, let's just cover at least couple of more questions. A lot of questions. I don't think we'll be able to cover all of them unless we're going to stay till another 40-45 minutes. But let's do at least one more. Jairaman Punithan asking question, a couple of questions actually from Marcel, which is, what's the PPA period generally in South Africa? How do you rank the creditworthiness of the off-takers, and which do you think is the best country, and how do you cope with the variability aspect of solar and wind in the grid? So it's kind of three questions in one again. So if you want to, so it's about the PPA duration and creditworthiness of off-takers and variability aspect of solar and wind in the grid. Yeah, you need a bit of water to answer all those questions. This is for you, Marcel.
So generally, when we sign a government PPA, it's 20 years. When we sign a private PPA, somewhere between 5 and 20, I think, depending on the LCOE and what makes sense to the client. So when it's a government bid program, 20 years, this is kind of what is required. So remember signing so just maybe my comment around capital and whether investors are ready for large scale projects. So I've been developing projects in Africa for 20 years. And the life of a developer, is not glamorous. There's you feast and then it's famine. And when you're good at it, you know what to do and you can start with the end in mind. And so maybe that does tie to the PPA question. When you have a government-backed offtake, so a securitized offtake, your chances of raising capital is just so much better. Right now, and whether this is hydrogen or electricity or whatever renewable source, biomass or whatever you're doing, if there's no off-taker, you will be developing for a very long time. And so quality of offtake, in my mind, is know what you're trying to produce and know who's going to buy it from you. And if you've got a blue chip mine in the hydrogen space, your chances of success are much higher. If you've got a 20-year government-backed PPA, your chances of success are much higher. So on the PPA and the term 20 years, the credit worthiness of off-takers. So in South Africa, again, the REAP is government-backed. So we get treasury-backed bonds on our PPA. So we can trade those globally, which attracts really cheap capital, which is how we get those low electricity rates. And which country do you think is the best country? The best country, I mean, I'm South African, so I would have to say South Africa. Maybe if it's the best country in the context of, in the best rugby playing country, I would also say South Africa. Best country, how do you cope variability aspect of solar and wind in the grid? So South Africa's got a really large, quite stable grid. Renewables only account for about 16% of total installed capacity. So the grid does have the capacity to act as a bit of a battery. So when we bid a project, we have to get a grid access. So we have to get an access to allowance from the state utility called Eskom that will tell us whether the grid in that particular point can handle the project that we're trying to bid. Again, so when you're a developer, you can know, if you know the critical path to success, you know which are the things you need to figure out first, because it would be heartbreaking if you've spent 7 years and $2 million developing a project that ultimately ends up not having grid access, So I think Harry's presentation is incredibly important. And for those aspiring developers, go study that document, because start with the end in mind. And bankability is key, and figure out the critical path so that you're not spending 5 years of your life developing a project that's a non-starter. That's my, I don't know if that's
from our experience, most of Africa has problems with grid, and actually not only Africa. I spoke to a guy from Utah, from US, and says, it's very hard to get grid connection as well.
Yes, but I think grid capacity, especially in many regions now. But I think what Marcel has said is that actually grid is quite stable, right, in South Africa, and has quite a fair.
The grid is very stable, comparable to other countries. But I think just back to my presentation, what we're saying is that we don't think that grid access should be a bottleneck to renewable energy development. We think that the levelized cost of energy storage, and solar is now at a place where we can develop mini grids or direct offtake agreements, so that grids should not be the bottleneck to electrifying Africa. 650 million people don't have access to electricity. If we wait for governments to build grids, we'll wait another 50 years. I'm gonna have another 50 years. You know, so yeah. I think that really is the opportunity. Is how do we bypass the grid, or how do we, green hydrogen is a wonderful opportunity. I think in the context of Africa, it really is exciting. But it's thinking about who is the market right now I'll be serving, and I don't know that there is a market. So as much as there might be capital providers with billions of dollars to invest, who are they going to be, backing? Because there's no bankable off-taker. So that's just the context.
For sure, but I think that we took the question out of context, because I think that the question was really about whether there are, investors are ready to kind of invest into large-scale capital project, renewable energy projects.
There was a separate question from BS.
Okay.
Marcel was asking.
Okay, good. Well,
so I think there's more money than there is projects right now, and I've been through many cycles of this in my career. There's been times where there's no money and lots of projects, and at the moment I really think there's lots of capital. There's maybe not as many bankable projects, and so encouraging all the business developers out there, kind of learn the steps and go and green the world. The world needs you.
Yeah,
exactly.
And we'll be happy to support all the developers with connecting you with the right investors. So let's make the planet green again together.
Exactly. So, ladies and gentlemen, on this note, we will wrap up. I'm astounded how many of you actually hung around, given that we actually 21 minutes, over time. So, thank you so much for your attention. Really appreciate you being here. I think the wrapping note, I know that everyone is incredibly startled, and so have I been. With events and everyone, like all this incredible level of uncertainty, what's going to happen, and so on. And I think my overarching kind of comment is that invariably we have to decarbonize. Invariably we need to develop, first of all, energy security, and also as well as sustainable energy sources, because whether, as I see in the sentiment that kind of now flying around, everyone in panic, and everyone tends to gravitate towards conventional energy sources but invariably, these are finite resources, and they're going to run out, and invariably we're going to also destroy our planet and destroy ourselves. So we have no choice. The only choice is to process waste and garbage into valuable resources and produce sustainable energy sources to power our homes and economy, because many now asking a question is like, oh my gosh, we're so energy dependent, right? If we don't have energy, we nothing. It's like, I keep on drawing this analogy, is that yes, we are also supporting sustainable agriculture and water desalination projects, but invariably energy comes first, because if you have energy, you can desalinate water, you can have greenhouses, right, and all other things. So this is indeed a great focus and great challenge for all of us. Thank you so much. So as Vlad said, next webinar series will take place on 15th of June.
No, sorry. The 5th of April, I said.
5th of April.
And I can see a lot of our audience got very excited about, the moment we touched the hydrogen subject. And this is actually going to be hydrogen and waste to energy. That's what we're going to cover on 5th of April. So, that's
Thank you very much
for us. Thank you very much, Marcel. Thank you very much, Harry. Amazing presentations. I really appreciate your input, and thank you, our audience, clients, and partners for attending this event. We look forward to kind of adding value and seeing you participating in the funding accelerator. Thank you, and have a great day or evening wherever you are.
Okay, thank you so much.
You guys.
Thank you,
Bye.
Harry. Thank you, Marcel. Thanks. Bye.